The 12th interest rate rise has just happened, and the Bank of England had taken the interest rate to 4.5% right now. So I want to share with you what you can do when you're starting in property or whether you're scaling in property and how it actually impacts you. And I want to share with you exactly what we're doing at Premier Property. For the first time, my name is Cameron Devady. I'm the founder of the Premier Property Group and investor developer over the last 30 years. And I like to share information on what we're actually doing right now so that you can use it to your advantage too. So let's discuss the impacts of this interest rate rise. Now, it's 0.25%, so it's gone up, but it ain't gone up that much. Something that was really predicted in the markets anyway when it comes to mind. Now, the thing about this interest rate rise is what do you do? How does it apply to you? How does it impact you? Now, as a property investor, are the interest rates too high? Well, let's assess this together. Now, when I started back in 1989, the interest rate back then for the building society was 17.5%. Leeds and Holback Building Society, 17.5%. Now, for some of you, that's shocking, isn't it? And for some of you, you can actually remember that. So why am I sharing this? Well, let's discuss. The interest rates right now are extremely workable. Yes, there have been 12 consecutive rises, but when we look at the rises, actually where we are right now, the interest rates that you've got that you can work with are extremely workable. So whether you're starting in property or whether you're scaling, 4.5% really ain't that great a deal when you look at it over a 100-year period. So really workable interest rates that are available to you right now. Now, how the interest rate is going to impact you as a property investor? Well, if you're starting in property right now and you're doing this correctly, you've got the right area, you've got the right rentals, where you've got a nice gross yield, you've got a nice income, there's a buffer above the mortgages. Well, what you're going to find is the extra 0.25% ain't really going to make that much difference. In fact, feel free to write this down. For every 1% of interest rate increase for £100,000, you will find that your mortgage payment will change on the interest element only by £83.33. And that is it. You can watch this back again, of course. So 0.25%, you can work out very quickly, it's not a lot of money. You're in the region of the £25, aren't you, of increase in that. So if you can find the properties where the income is at the right place in the first place, where is a rental area, where you're getting tenants that are paying market rents, that are good rents, and you have those areas and your properties are at a good standard, well then you are not really going to be impacted by the extra 0.25% that has happened. Now, if you're a property investor and you already have property, there's many challenging times for investors or people with property right now where they're falling off of their fixed rates and they're moving into a variable rate. Now, that's a bit of a scary space right now, if I'm being completely honest with you. And even some of our mortgages have been impacted where they've gone up to, well over into double digits right now, where they're on the variable. So what we're doing, and of course this is not financial advice, but what we're doing is we're looking at 5-year fixes, longer term products that you can actually go on to where that interest rate is actually considerably reduced. Because the markets are not looking at what the Bank of England is doing right now. The markets are actually assessing what the whole of the government in the UK and the Bank of England are doing for the economy, and they're taking a medium term, longer term approach. And right now, the consensus is what we're doing is very sensible because the whole world is watching. That's the thing. It's not just money coming from the Bank of England. There's money from other institutions. There's money from America. You get my point. And they are assessing that what we're doing is pretty wise, it's very good, and they like it. And because of this, what you're finding is that the rates when it comes to actual real lending are very reasonable, and we like 5-year fixes, and we're finding those rates actually in a quite shocking actually, that the rates are actually coming down. So fixed rates are working really well right now. Of course, I'm not giving you any financial advice, I'm just sharing with you exactly what we're doing right now. Now, one of the challenges that investors are having when it comes to variable rates is when they're going onto a new product, they're getting much less of a loan. So let me explain this, I'll draw it on the board actually. So when it comes to lending, so let's say you've got 100k that you've borrowed, and all great until it goes to a variable rate of something like 9%, and with today's value it goes up further by another 0.25% if it's on a variable. So it's increasing, isn't it? So investors can decide to go on to another lender and with another product. So they move on to another product and they're expecting that 100k loan to be replaced by the new product, which might be at a very sensible rate. Like what I say, we're liking 5-year fixes. I say it again, no financial advice, I'm just showing you what we're doing. So they go into a 5-year fix, let's say, and that rate might be somewhere in the region of 5 to 6%. Let's call it 5.5%. Of course, the 5.5% is much better than the 9 plus the 0.25 that's just happened today. And I'm pretty sure lenders are really going to jump onto this as quick as possible when it comes to variable rates. So really, you've got to do something about this, right? So the 5.5%, now you've got the 5.5% fix. However, the lenders look at your 100K and they stress test it. Now, just for clarity, they're checking what the property rental is for that particular property, how much rental is being produced, and they work out the numbers on how much they're going to lend you on the rental income, and also what the mortgage payment is going to be. Yeah, a couple of tests. We can discuss that on another video. So that is happening. So when that happens, you might find, I'm just going to put some quick numbers up here, that rather than 100K, you're ending up with 75K. So you've gone from your variable and you've gone on to another product, and you've gone on to a product where it's a very sensible rate. By the way, you're finding that you're only getting 75K, so of course you have a 25K shortfall. Now there's a lot of this happening right now in the market. So what do you do? So if somebody has the money to actually come up with the extra 25K, they're putting that in and they're getting that loan here. Or unfortunately, people are having to struggle and sell off those properties. We're going to see more of this over the next 6 to 9 months happening. And there's going to be more people, unfortunately, in scenarios when they're going to have to sell off the property. People and investors that are not upskilling, who just had a go when the interest rates were really low, are finding themselves in positions right now where either they upskill and learn what to do, or unfortunately they end up losing those properties. Let's be honest, that's what's actually happening right now. So one of the things that we do is we speak to mortgage brokers and we find out from the mortgage broker, and the key question to ask is, which lender do you have where they've actually got a lower interest rate and they've got a higher admin fee? Now what that does, it brings down those stress tests, which mean you end up getting more money. So in this way, you could end up with the whole 100K refinanced. The rate might be lower, but they'll add an admin fee to that as well. So pros and cons, right? There's a balancing approach. Now keep in touch with your mortgage broker, find out what kind of products that are available. We do the exact same thing. And in this way, you're able to transfer this loan. And this specifically is a large problem in areas that are large towns and satellite towns where the property values are higher, yet the rental income in comparison is lower. So keep this in mind, a great way of actually having a workaround for this. Now here's another couple of solutions that you can be working with when the interest rates are rising, whether you're starting in property or whether you're scaling your property business. So let's discuss this as well now. Now, keep in mind that one way of getting your funding is from traditional investing, but that's not the only way. Another way that we like working with finance is through working with other people. Because keep in mind, there's a lot of people, your friends, your family, colleagues of long standing, people that you've known for many years, where they've got money sitting in the bank right now, and you know inflation is eroding that money. Now you've got to be on the right side of FCA regulations for this. So like what I say, people that you know, long standing, people that are friends of yours and family, people that have that money, as long as they know what you need to do, they understand that you know what to do, well then, in my experience, what happens is they will lend you that money as well. So what that means is the interest rates go well out the window. So it no longer is the case that it has to work towards the Bank of England base rate or above. It can be much lower figures, because if you're dealing with your family, if you're dealing with people that they care about you, it's not just necessarily about the highest interest rate. I hope I'm making some sense here. And there are many different ways you can work. So, it can be that case. So the interest rate can actually be much lower. So in some instances, it's a case of the interest becoming lower while you actually give them the opportunity, for example, to learn on a project or to joint venture with you in some shape and form. Now, if you're not part of our community and you haven't subscribed yet, well, you can do it right now. You can subscribe to our channel right now. And I'm doing a number of these videos, very relevant. So you can click on that bell icon and get the latest notification. You can do this right now, actually. So what's the third way of getting around the interest rates rising? Well, what you can also be doing is look at your strategy. Now, if you're like me, you focus on the strategies right now in 2023, which are income producing. So one of our favorite strategies is houses of multiple occupancy. That's working really well. You might be looking at serviced accommodation. the Airbnb model, which does still work, and it works in pockets across the country. You might be looking at trading property where you're buying and you're selling, because like what I say, there's going to be even more opportunities that are coming up where people are offloading properties because they're getting into a situation where they haven't made that informed decision, and unfortunately they're selling off. You can take on the opportunity where you can take that problem away from them and actually change it into an opportunity for you. So there's a lot of trading that you can be doing. Right now, what we're finding when it comes to development, developers that were taking on properties, getting planning gain on them and looking to sell them at estate agents, right now they're finding that those properties are sticking because of all the uncertainty out there in the market. In fact, the market is very certain when you know what you're doing. So what we're doing is right now is negotiating with those developers and buying those properties with the planning and then building them. It's a brilliant way because most of the work has already been done. For the whole planning process has already been done. And right now, the people that are selling where they were over optimistic last year, right now they're getting a reality check, and now you have the opportunity to make those gains as well. So by doing that, the interest rates you can put into your expenses and you can work out your margins right from the beginning. So the Bank of England, they've raised the interest rates, gone up by another 0.25%. We're at 4.5% now, and there are so many workarounds like I'm sharing with you today, and you can really make this work. There is such massive opportunity in this current market, and I'm only sharing with you from personal perspective. It's Cam Dvedi helping you take your property investing to the next level. I'll see you in the next video.